Okay, great. So we're going to jump right in. So the presenters today, Chris Antlitz, I'm the one speaking right now, and then my colleague Steve Vachon will be co-presenting today. The email address for the webinar slides is webinars@tbri.com. You can see it at the bottom right-hand side of the slide. Again, if you want a copy of the slides, you have to email that address to get them. Okay, so before we jump into the content, this is a list of the reports that the telecom group at TBR is producing now. This is just the syndicated reports. We also have a custom side of the business. So just so everybody knows, if you're not familiar with TBR, we focus on some of the key areas in the telecom ecosystem, specifically private cellular networks, edge computing, the web scale market. We do individual vendor and operator reports, and we do a variety of benchmarks in the telecom infrastructure services market and in the operator space, specifically U.S. operators, which is what we're going to be presenting today. So the box I just circled there is the report that we're sharing findings from. There's a bunch of folks on this call that already subscribe to TBR's research, so if you don't have access to the reports, we can get you access if your company has a subscription. Just send us an email or email the webinars@tbri.com and they'll get you set up with that. Okay, so an overview of what's in this benchmark. So we're covering the biggest operators in the States. So you have your big three, and then we have the tier two, so US Cellular, Dish Network, and then the cable MVNOs, specifically Altice, Xfinity, and Spectrum. And there's data on all of those companies in the report. So specifically what we're examining is key trends, financial performance, go-to-market initiatives, resource management strategies. Those are the primary lenses that we're looking at these companies and benchmarking them in this report. So with that, I'm going to hand it over to Steve.
All right, thank you everybody for joining in today. This first slide we're looking at is industry trends. So these are some of the top U.S. wireless trends. So we discuss these in detail within the benchmark. So we're going to dive into these topics today. One of the things we're going to cover is that operators generate revenue growth as pandemic impacts subside. So all of the operators covered in the benchmark for 1Q21, we've seen them all generating year-to-year revenue growth in 1Q21. So we're seeing some of the negative impacts that we saw in 2020 from the pandemic. We're starting to see those impacts subside in the U.S. market. So today we're going to take a look at some of the revenue growth we're seeing. We're also going to take a look at some of the inhibitors in the market as well that are limiting revenue growth. So another area we're going to take a look at today is that T-Mobile will outpace AT&T and Verizon in 5G coverage through 2024. So we're going to see T-Mobile be a very disruptive player within the 5G era. So they have a very strong competitive advantage right now. That's because of their 2.5 gigahertz spectrum they gained from the Sprint merger. So we're going to take a look at T-Mobile's advantage over the next several years through 2024. We're also going to take a look at AT&T and Verizon as well, taking a look at their mid-band spectrum deployment timelines through their C-band, the C-band spectrum they recently acquired. Then the third trend we're going to be taking a look at today is cable MVNOs are creating greater disruption within the U.S. wireless market. So we're seeing some acceleration in subscriber growth from the cable providers. So we look at 1Q21, about 600,000 net additions combined with Altice Mobile, Spectrum Mobile, and Xfinity. So we're seeing that impact in the market, so that's causing some more limited revenue growth for the Tier 1 operators. So we're going to take a look at that today, take a look at how they're competing, how they're comparing against their larger rivals, also take a look at some of their strategies to increase revenue and profitability over the next several years. All right, so moving on to the next slide. So we've got a ranking table on this slide. So this is ranked by total wireless revenue, so service revenue and equipment revenues included with that. And you also see the market share figures as well on the table. So this is market share compared against the other operators in the benchmark. So it excludes like rest of market, so some the other tier 2 and tier 3 operators are covered in the benchmark currently. They're not factored into that. So taking a look at this table, we can see all the operators are able to increase wireless revenue year to year in 1Q21. There is one exception, that's Dish. That's because they didn't have a wireless business in 1Q20. They didn't launch yet. So they launched their wireless retail business that happened in July. With the Boost Mobile acquisition closing. So all the other carriers were able to generate revenue growth in 1Q21. So we look at the right side, some of the revenue growth drivers. Probably the most major is continued connection growth. Smartphones are still the biggest portion of connection growth. We see some of the other devices as well, tablets, mobile hotspots, connected cars. Wearables has been a very big driver the last couple of years as well. Another driver of revenue growth is unlimited data plan adoption. We see a lot of customers stepping up to some higher tier unlimited data plans. So migrating from tier data to unlimited data, that's been driving revenue growth in the U.S. Another is a greater cable MVNO brand awareness, just increased marketing of Xfinity Mobile, Spectrum Mobile, some expanded retail footprint, some new like Xfinity stores launching, for example. Another driver we saw in 1Q21 is returning store traffic. So we look at 1Q20 in comparison. We saw a lot of the stores closing during that time frame. Maybe that was the beginning of the pandemic in the U.S. So most of the stores are open currently that were closed in 1Q20. So we see that benefit in comparison to 1Q20. Strong equipment revenue growth that came out of that, but there's some mixed results coming from the in-store traffic. So on one hand, you're going to have the higher equipment revenue, higher gross additions, but if you look at the other side of things, more people are going to stores. That means more people are switching carriers. So you're going to see some higher churn rates in 2021 in comparison to 2020. Another is increased adoption of higher priced smartphones. So pretty much across the industry, average price of device sold that's going up. So you see a lot of people gravitating to the higher end, like iPhone 12 model, Samsung Galaxy model. So that's driving that. Another driver we've seen through the past year is remote working and learning. Specifically tablets and mobile hotspots. A lot of people were using those devices to accommodate their remote work environments. Same thing with remote learning. There's definitely going to be a cool down of that. We're going to see some deceleration from tablets and mobile hotspots this year. We see a lot of people returning back to work and back to the office, heading back to the office, students returning to on-site learning. So it'll be a deceleration from that this year. Another is government stimulus. I see this most in the prepaid market. Receiving stimulus payments is helping some of the consumers help to purchase new devices, especially in prepaid. They don't have the option of postpaid financing there. So I think that's a big driver within the prepaid improved performance we're seeing in the prepaid market. Some inhibitors to revenue growth would be the macroeconomic challenges, consumers being impacted financially. That's shifting some customers to migrate to some lower price offerings. Maturity of smartphone markets. Smartphone penetration continues to increase in the U.S. So more and more connection growth is coming from the lower ARPU devices. You got the things like the tablets, wearables, connected cars, usually around like a $10 price point from those devices, and monthly revenue from that. So it's much lower than smartphone, like a new smartphone connection. Lengthening upgrade cycles. Upgrade cycles are lengthening pretty much across the industry. Customers are having less incentive to upgrade their devices, less new compelling features coming out. Another lesson that we cover is aggressive pricing promotion. This is especially true with multi-line accounts. We're seeing more and more new connections coming on, like family plans, other multi-line accounts. So they're coming at a discounted rate. So that's another thing we're seeing in the industry that's limiting ARPU. So there's a couple of drivers from the rankings. So we see Verizon, they're still the leading operator in 1Q21. They still have the highest market share. They did have some subscriber challenges in the postpaid market. They lost some postpaid net additions, but they've been very successful in migrating their customers to the higher tier data plan. So they've been able to improve their ARPU and ARPA by doing that. Then we look at the cable MVNOs on the graph. So we look at Xfinity Mobile, Spectrum Mobile, Altice. They're generating very strong revenue growth in 1Q21, especially Xfinity and Spectrum Mobile. When you look at the overall market share, it's still very small compared to the rest of the industry. So the next few years, they're going to be gradually growing market share, but it's still going to be a very minimal portion of the entire industry market share compared to the rest of the industry. And then the last call out is T-Mobile. So they had the greatest market share gain in 1Q21. A lot of that's due to the Sprint merger closing. But I mean, organically, there's been a lot of strong growth with them over the past year. Still, maybe they still led the industry in postpaid net additions. I think in the next several years, they're still going to be gaining the most market share. There's going to be a shift in their strategy, though. So we look at the last decade, we'll look at the 2010s. Their differentiator was mostly the pricing. So they focus on a pricing differentiator, undercutting AT&T and Verizon in price. There's also some of the compelling incentives like Netflix on Us, some of those bundled services. That was the main differentiator for T-Mobile. Where we see them in the market, they're still going to have those offers, but the greater differentiator is going to become the network. We're going to see their 5G network becoming the greater disruptor in the market. All right, so the next few slides, we're going to take a look at the 5G market right now in the U.S., take a look at T-Mobile, their advantage, and also where AT&T and Verizon are going to be positioned for the next few years. So where we are in the U.S., I'd say we're in stage 2 of 5G development in the U.S., and that's going to be the focus on deploying the mid-band spectrum. Stage 1 is more of the focus on the low-band and high-band spectrum. If you're not familiar with the spectrum characteristics, you can see that on the chart on the right. So basically, the low-band spectrum has the greatest coverage. High-band spectrum has a greater capacity and speeds. When we look at the mid-band, we see that as being the ideal balance of speed, coverage, and capacity. So we think we're going to see the greatest impact from mid-band spectrum deployments, especially on the consumer front. We're going to see the greatest, service benefits to the greatest amount of customers from mid-band. If you look at low-band, T-Mobile has the advantage right now. They're at 300 million pops. That's because of the 600 megahertz coverage. They're benefiting from that. AT&T and Verizon are trailing slightly. So low band hasn't really been a game changer. There's not, it's incrementally faster than LTE, but it's not a huge difference in user experience. But I think one benefit that we're seeing from low band is on the marketing end, being able to market nationwide 5G coverage through this low band spectrum. There's been a marketing benefit for the operators. It's been helping to steer some customers over to the 5G plans. Also, the iPhone 12 being able to market at nationwide coverage that helped to attract those customers. Looking at the high band side of things, T-Mobile is just at 8 cities currently, so they're de-emphasizing millimeter wave currently, so they're much more focused on mid-band. AT&T is at 38, and we've got Verizon about 70 cities. So we can see that benefit, that high capacity. So it's been very beneficial in some of the larger markets. It's mostly deployed in the larger markets and the big venues, stadiums, and arenas. So it's been very useful in providing that capacity there. For use cases, I think we're going to see more revenue monetization opportunities in the next few years, especially with AT&T and Verizon. Integrating high-band spectrum with areas like private cellular networks, edge computing, leveraging web-scale partnerships. That's going to position them to create new revenue opportunities. When we look at mid-band, we can see T-Mobile's advantage right now. So they're already at 150 million pops to their 2.5 gigahertz spectrum. So you look at the benefits we're going to see from mid-band 5G. So one of the main benefits is going to be the accelerated data speeds nationwide. Currently, I think LTE is still capable of supporting most of the smartphone use cases out there. It's good enough for most of the smartphone applications out there. But if you look at mid-band, I think it's going to be an improved quality of service, improved user experience, especially looking at some of the high bandwidth applications out there, HD video streaming, large file downloads, cloud gaming as well. There's going to be improved service quality from that and improved user experience. So that's going to help to drive subscriber growth and also improve churn. Another benefit is going to be the added capacity to support rising network traffic. So a good example of this is with T-Mobile, so they launched a new plan recently, T-Mobile Magenta Max. So it's essentially a true unlimited data plan. There's no throttling limits with it, so speeds aren't going to slow down if you hit like a certain data threshold from that. So that's a competitive advantage they're getting from that. AT&T and Verizon don't have similar plans right now. It's likely due to capacity limitations, likely. So we might see AT&T and Verizon offer similar plans in the future once we see their C-band deployments moving forward. And perhaps probably the greatest benefit we're going to see from mid-band 5G services is going to be the expansion of 5G fixed wireless services. So it's going to help, especially T-Mobile and Verizon, accelerate their 5G fixed wireless deployments. There's going to be a greater disruptor to the cable providers. And the LTE services are out there today. I mean, it's especially beneficial in rural markets, but it's not very competitive to the cables. To the cable companies. So once we see 5G fixed wireless out more in the market, we're going to see greater disruption to the cable providers. So looking at the next slide, this highlights T-Mobile's advantage they're going to have through through 2024. We look where we're at currently. T-Mobile is at 150 million pops. So in the first half, we see Verizon and AT&T both participating in the C-band auction. So AT&T spent $27.4 billion, Verizon $52.9 billion. There's going to be additional costs too. Verizon is looking to spend $10 billion in deployment costs. Next several years, AT&T is looking at $6 to $8 billion. So this illustrates, the critical importance that these C-band investments is to Verizon and AT&T. They remain competitive against T-Mobile. Look at the end of the year, moving into second half of 2021. T-Mobile is going to be at 200 million pops. So Verizon, AT&T, they're not going to have the commercial services out really until 2022. They're waiting for the spectrum to be cleared. So the first phase is being held by some satellite providers. They have a deadline of December 2021 to clear that. So basically, the next half of the year is going to be focused on preparing the network for C-band. Verizon is looking to build up to 8,000 C-band sites. Continuing network testing, collaborating with the vendors. Moving into 2022, that's when we're going to see the commercial C-band services hitting the market. Verizon is looking to hit 100 million, 75 million with AT&T. T-Mobile is already going to be at 250 million with their 2.5 gigahertz spectrum. 2023 and 24, there's going to be another big jump to the second stage. The remaining licenses being held by the satellite providers, those are set to clear by the end of 2023. So you're going to see some increased C-band coverage coming from Verizon and AT&T. Verizon's looking to hit 175 at the end of 2023. AT&T is about 200 million. So you see about Verizon, AT&T about coming, nearing equal coverage within that time frame. So in 2024, Verizon is looking to hit 250 million pops. We're still waiting. Haven't heard any projections yet from AT&T and T-Mobile of like where they're looking to be at for 2024. So this really illustrates, just the advantage T-Mobile is going to have in the 5G market through 2024. So this next slide, these are some of the major divestments that we've seen in the market. This has been since 2019. This isn't a comprehensive list, or some other ones that have been announced too, but this showcases the most major divestments that have been made. So there's really a twofold strategy behind these divestments. One, it's to reduce debt, improve leverage ratios, improve the balance sheet. That's like one factor of the divestments. So the second is going to be to help support the higher CapEx spending from AT&T and Verizon over the next several years. So if the high deployment costs are going to have, the billions are going to spend, that's going to help to fund that. The most major example would be AT&T's spinoff of Warner Media of Discovery. It's a $43 billion value from that. So that's going to cause a significant uptick in AT&T spending. So once that closes, which is expected by mid-2022, they're looking at about a $2 billion increase in annual consolidated CapEx. That's going to help to fund that. There's a lot of other examples too, of AT&T divesting out of pay TV business. Hasn't been a viable business for AT&T for a long time. It's losing a lot of subscribers. Divesting that, getting that off their books is going to help their profitability, help their margins, also provide funding for the CapEx. Verizon also, the divestment of Verizon Media to Apollo Global Management. Some other areas are targeting, most of those deal with media. There's also some divestments of some less viable regional operations. AT&T, as an example, they recently sold their Puerto Rico and U.S. Virgin Islands operations. Another opportunity that they might possibly pursue is AT&T Mexico. That unit's that's been reporting a net operating loss, the last several years, basically since its launch. So it hasn't been a profitable business. So that might be a potential business that they might divest if they can find a interested buyer. There's some other smaller divestments we can see, like Playdemic to Electronic Arts. That's basically a gaming unit within Warner Media. Crunchyroll was another media unit. Some of the other businesses are looking at some of the less strategic, possibly less viable businesses. Recent example would be AT&T Government Solutions. So basically a professional services branch of AT&T. They had some federal contracts. DoD was probably the biggest contract out of that. That was sold recently as well. So looking at this slide here, this charts wireless CapEx from 2018 to 2022. It's important to note this is exclusively wireless CapEx. So for AT&T and Verizon, we estimated out some of the non-related business units that aren't related to wireless, such as their media businesses and their wireline businesses as well. So when you look at 2021, we can see for all the tier ones, we see the increase in CapEx, also heading into 2022 as well. Looking at Verizon, so there's that jump in 2021. Part of that, I think they're going to have early C-band deployment costs in 2021. I think it's 2.5 to 3 billion is what they're targeting for this year. That attributes to that increase in 2021. Looking in 22, we expect even higher C-band deployment costs as they start to launch the commercial markets of C-band. For AT&T, it's similar. We see the ramp up in 2021, even a greater ramp up in 2022 once they expect to close the Warner Media and Discovery spinoff. It's going to be that $2 billion addition to their annual CapEx is going to be dedicated to C-band. The other part of that's going to be their expanding their fiber footprint. They're basically looking to double their fiber to the home footprint by 2025. That would be allocated. We would allocate that as wireline CapEx, so it's not factored into the 2022 wireless estimate. Also, for T-Mobile, we see the jump up from 2020 to 2021. A lot of that's due because the accelerated Sprint network integration, getting that 2.5 gigahertz spectrum deployed, gaining that competitive advantage over AT&T and Verizon. They're expecting their CapEx to be similar levels next year, so about similar level of spending. We're going to see a cool down with them, like starting in 2023, once they're more advanced in the Sprint network integration when they're in their later stages. All right, so I looked at the 5G market. Another area we focus on in the report is the go-to-market strategies we're seeing in the market. Some of the topics that we cover in the 1Q21 report, it's the content partnerships, the U.S. wireless operators. This isn't something brand new. This has been going on like several years in the market. For the last several months, there's definitely been a progression of this strategy, especially with T-Mobile and Verizon. There's been a number of new content partners that they've announced recently. There's really three type of content partners they're targeting. One is the video streaming services, like a Netflix, Philo, Disney Plus, those type of services. The other is music streaming services, like Apple Music with Verizon's partnership. That'd be an example of that. So a third area that we're seeing is the gaming partnerships, and I think this is going to be a greater focus for the operators in the next several years. What we're seeing now, we've got AT&T, they started partnering with Google Stadia Pro. Verizon, they're partnering with Apple Arcade. Google Play Pass is the other one too, so it can serve both Apple and Android customers through that. So this is going to be a bigger focus, I think. We're seeing more and more people using their games on the mobile devices. So having that free or discounted access to these gaming services is going to create a stickier value proposition for the operator, having those gaming subscriptions tied to their service plans. Some of the main benefits we're seeing with the content partnerships, one would be the improved value proposition and increased ARPU stemming from unlimited data plans. Verizon is a good example of this. So basically last quarter, 90% of the new accounts are unlimited data plans. If you take that group, 50% of those customers are enrolling in the higher tier options. So we're seeing a lot of the customers, migrating to the highest tier unlimited data plans. They want, the Apple Arcade coverage, Apple Music. They want like the full gamut of the services being offered through those unlimited data plans, the high-end ones. Another is these partnerships are going to help fixed wireless services compete with cable multiplay packages. An example, this would be like T-Mobile, so they're offering discounted access to YouTube TV. Having that value proposition is going to help T-Mobile to compete against a double play, triple play package offered by a cable provider. So the last benefit we see is that these partnerships enable operators to concentrate more fully on core businesses. T-Mobile is another example of this. Basically their T-Vision Home, their first-party pay TV service, that launched last year, only lasted a few months. They discontinued that, I think, in March. After that, they focused more on providing access to streaming services. That's when they started partnering with Philo and YouTube TV. I think that was a very viable decision for them, trying to build a profitable pay TV business on their own, a first-party one. I thought that was an overall distraction to their overall 5G strategy, the core wireless strategy. So we look at the tier 2s in the market. We're not, it's been very limited content partnerships being announced. I think there's going to be some opportunity there, especially with Dish. I think there's a strong possibility you might see some type of Sling TV bundles out their wireless offerings, also possibly with their satellite services as well. I think another opportunity we might see is with Comcast, with Xfinity Mobile. So you have Peacock, that's under the Comcast umbrella. So there's definitely that type of opportunity to bundle Peacock with Xfinity Mobile. It definitely would be a way that Comcast could help to increase the Peacock advertising revenue as well. So the next few slides, we're going to take a look at some of the metrics we cover. There's the financial metrics on here. Next couple of slides, we're going to look at some subscriber metrics. So looking at this bubble graph, so basically it's the x-axis is wireless EBITDA margin, year-to-year revenue growth. On the y-axis, some call-outs from here. So we can see AT&T and Verizon are still the most profitable operators in the U.S. I think this year we're going to have like some impacts to margins. It started in 1Q21. So one of the things we're going to see is they're basically revamping their device strategy. We're seeing much more aggressive device promotions coming from them. That's been happening in the industry the last few years, but the difference is we're seeing these promotions being offered to existing customers. Before, it was more of like a switching tactic. They're getting offered more and more to new customers. So it's almost like a return to the old postpaid contract in a sense. So they're leveraging these device promotions. I think it's helping them to spur subscriber growth. But the main benefit is going to lock their customer base in. So they basically need to be like a customer for at least 2 years if they want to get the full billing credits from the promotions. So they're going to see some mixed impacts to margins over the next year. So you're going to see I think we're going to see quite a higher jump in equipment costs, equipment subsidy expenses over the next year, but we're going to also see some benefit from this strategy too. It's going to help with the service revenue. It's going to help to increase subscriber growth. It's going to help to spur that. At the same time, it's going to help to retain their base as well. So we're going to see some mixed impacts to margins throughout the year. Another call out is T-Mobile, very high subscriber growth in the quarter. I think they're around 77%. I think they're around that mark in 1Q21. A lot of that was from the Sprint merger. So in 2Q21, we're going to see a significant deceleration in their growth rate, but they're still going to have high organic revenue growth. I mean, they're still going to be leading the market in postpaid net addition. So we're projecting around like a 12 to 13% in 2Q21, and then it's going to be driven by their organic businesses. Then we look at the cable operators on the graph. You can see they're trailing the larger rivals by quite a bit in profitability in terms of the wireless EBITDA margin, but we're seeing some improvement. One example would be Xfinity Mobile. This is the first quarter they're actually able to report a positive wireless EBITDA margin. I think there's going to be some opportunity for those companies to improve profitability over the next couple of years. One big thing is there's so much opportunity for them to gain new customers. If you look at their wireless business in comparison to their broader cable business, the adoption is relatively low. For example, you look at Comcast, they have about 33 million customer accounts. So out of that, there's only about 2 million accounts that are subscribed currently to Xfinity Mobile. So that's about a 6% adoption rate. So there's still a huge opportunity for the cable operators to target their wireless businesses to their existing customer base. Another driver of improved profitability for the cable operators is going to come from the CBRS spectrum. So they're going to see Spectrum Mobile and Xfinity Mobile. They're going to start offloading some of their traffic onto CBRS spectrum over the next couple of years. That's going to have a significant network cost reduction for them. So they're going to target the most strategic markets, the markets that make the most economic sense. So they're probably looking at like the largest cities. They're going to look to target those deployments in. So this slide here, we're looking at the postpaid market. We see T-Mobile, I mean, they've led by quite a wide margin again in 1Q21 in the postpaid market. So we're going to see some new customer groups that are going to be targeting more over the next several years. Those two groups would be business customers and also customers in rural markets. So they're looking to increase their market share quite significantly in both of them. So T-Mobile has been historically under-penetrated in both the rural markets and the business, within the business customers as well. So they're looking to go, they have about a low teens penetration rate in both segments. So they're looking to hit about 20% by 2025. So you're going to see a much greater focus from T-Mobile targeting both the business customers and the customers in the rural markets. For AT&T, so they've had like a rebound the last 3 quarters. They've actually been able to outperform Verizon in the postpaid market. We think FirstNet's been a big driver of that. So they gained about 300,000 customers in 1Q21. So we've seen the greater demand for FirstNet amidst the pandemic. We're seeing some like new customers are targeting with FirstNet. Doctors and nurses is like a new like focus for them in the past year. They've had some new promotions targeting them. Also from the pandemic, there's some new sites. I mean, they've been targeting some like makeshift medical facilities, like a drive-through vaccination site, drive-through testing centers. They've been targeting those type of environments as well. So you look at Altice, so they've been trailing Spectrum Mobile and Xfinity Mobile by quite a bit. So a big factor to that, they've been having very high churn rates. So basically the majority of those customers have been on Sprint's network. So they've been having very high churn rates from that. Because of that, Altice has been a little bit muted in their marketing. So at the end of 1Q21, most of those customers have transitioned to T-Mobile's network. So there should be some significant churn reduction from that. Also, the second half of the year, we're going to see some greater marketing and promotion from Altice Mobile. I mean, it's likely going to happen in the later half of the year. We're looking at the iPhone 13 release, possibly the back to school season as well. Then Verizon, so they bought 170 net postpaid customers in the quarter. I think they're probably having the greatest challenge from the macroeconomic climate over the past year. That's largely due to their higher price point. So it's been a challenge for them the last few quarters. I think we're going to see some improvement in 2Q21, the unlimited data plans and new options they have, and it's going to help with that. Also, the new device promotions they're offering. Also, you know, we have some gradually improving macroeconomic conditions in the U.S. too. I think that's going to be beneficial to Verizon. Looking at the 1Q21 prepaid net additions, so AT&T, T-Mobile, Verizon, and U.S. Cellular, there's been an improvement year over year in prepaid subscriber growth. I think the pandemic, the macroeconomic challenges has been helping to spur some prepaid subscriber growth, just having those cheaper options on your prepaid. That's been helping to drive that. So also, I think the multi-branding, I think, is helping the operators too. I mean, like with AT&T, Cricket Wireless, it's separate branding. Same thing with T-Mobile, Metro for PCS. T-Mobile for Metro PCS is generally distributed separately from T-Mobile. Same thing with Verizon with their Visible and Yahoo Mobile brands. So having this multi-brand strategy is really helping them to avoid cannibalization from their postpaid base. So if we look at Dish, so they lost 155,000 prepaid customers. Basically, how they're comprised, there's a smaller, Dish is mostly prepaid, so Boost is about 9 million customers from that. Then they have a postpaid business that right now is just limited to Ting Mobile. So if you look at those 155,000 customer losses, that's from Boost Mobile. I think the biggest driver from that is their pricing strategy. I think they're having a very difficult time differentiating their pricing. They're basically targeting the very low end of the market. There's an emphasis on like the tiered data plans. I think their lowest point is like $15 for 2 gigabytes. I mean, they're doing that intentionally, so they've been focused on tiered data plans. So they're very focused on minimizing the network roaming costs they have with T-Mobile. They do have unlimited data plans, but it's not at a competitive price point. We're looking at $50, $60 unlimited data plans. So there's much cheaper options, for the price-sensitive customers. They're like solely interested in price. The cable operators are much more competitive. Also, some of the other prepaid brands out there are much more competitive in unlimited data. So they've been targeting tiered data mostly, but there's much less demand in the market for that. Just in conclusion, we're going to take a look at 2021 to 2022 industry outlook. So these are just some trends that we're going to see through 2022. For T-Mobile, obviously 5G replaces competitive pricing as main differentiator. Yeah, we see that already with their marketing is much more of a focus, on the 5G capabilities. There's been a little bit of a cool down to the new Un-carrier incentives. So they're really more in the position now to rely on the network to target the higher value premium customers. They're in a position where they can be less reliant, on being aggressive in their pricing. Another thing we're going to see from T-Mobile is we're going to see fixed wireless services will spur smartphone subscriber growth. So we're going to see smartphone subscriber growth grow in tandem with fixed wireless services. So that's one of the requirements to enroll in their fixed wireless services. You need to be a current smartphone subscriber. So we're going to see both of those services grow together. AT&T and Verizon, we're going to still see that continued focus on higher valued customers to increase service revenue, moving customers to higher tier unlimited data plans. And another thing we're going to see is we're going to see them double down on enterprise segments to offset consumer market pressures. So they got that challenge in T-Mobile, especially in the consumer market with their 5G position. But we see AT&T and Verizon, just doubling down on their strengths in the enterprise segment, just having the more robust portfolio in comparison to T-Mobile, having a much deeper existing customer base in the enterprise segment. It's going to be an advantage for them too. Also the web scale partnerships, portfolio development in private cellular networks, edge compute. Those are going to be strong opportunities for AT&T and Verizon. Then looking at the tier 2 operators, I think we're going to see them launch new pricing strategies to accelerate growth. I think this is going to be true for Dish Wireless in particular. I think with the launch of the 5G network, there's going to be some rebranding around that. There might possibly be a new postpaid or prepaid brand being launched with that. I think it's going to be very similar to what they do with Sling TV. So it's not going to have that direct Dish association with the branding to help separate that from Dish's satellite business. And last thing we see is that cable MVNO profitability will gradually improve. So we still see them slowly taking market share in the U.S. and they're also going to improve profitability as they offload more of their traffic on CBRS spectrum. So I'm done with the slide deck. Me and Chris are open to taking questions.
Okay, great. So again, if you have a question, just add it. There should be a button at the bottom left where you can type in your question. We do have one question right now. So the question is, can you talk about non-phone revenue growth and adoption? So I think, Steve, we can go back to the postpaid slide. So these numbers include all postpaid connections. So phones, tablets, wearables, mobile hotspots, other devices are included in those numbers. And I think, especially if you look at some operators, specifically AT&T, a significant portion of their net adds is connected cars. Phones is not as big of a contributor, and I think that speaks to the broader industry, maybe with the exception of T-Mobile, where we're seeing the composition of the submix is shifting towards other types of devices, and there's less emphasis on the phone subs as the churn rates come down and people tend to stick with their provider. That's one of the things we saw during the pandemic with the churn rates. So as Steve was talking about before, the on a raw connection basis, most of those numbers, when you see those headline numbers of connection adds, it's not the high-value phones. It's typically the majority of that addition is the lower ARPU connected devices in those other categories?
Yeah, it's been a gradual shift from phones. It's increasing to the other segments. We cover in more detail in the benchmark. Look at some of the companies like in 1 through 21. If you look at T-Mobile's net additions, they had 773,000 phones. In comparison, 430,000 were from the other segment. So, it's still the majority is phones for T-Mobile. But I mean, for the most part, the other segments becoming a greater portion of the net adds. I mean, it's going to happen, especially with maturing smartphone market as the smartphone penetration rates increase. AT&T is like an interesting example for them. If you look at them, they're 595,000 postpaid net additions for phones. They had 228,000 other additions as in postpaid. But they're a little bit different. They have a very huge wholesale business. So they've been selling millions and millions of wholesale connections to the automobile manufacturers. That's been a big growth driver for them and connections in the wholesale market.
All right, so we got a couple more questions in. The next question is, how do you see the carriers, specifically the big three, their positions in the 5G enterprise market, thinking private networks especially? So they all have plays for private networks. Private networks is a very unique space. And if you've seen our other research, we are saying that the opportunity is going to other parties, not specifically the telco. So, for example, the large enterprises that we've been researching are going to either direct to the OEM. They're relying on their existing SI partners, or they're going to a web scale company, so a Microsoft, an Amazon, or a Google to source those solutions. And actually, on the latter, Microsoft just made some pretty significant announcements 2 weeks ago of their new private 5G MEC solution, where they've tightly integrated Affirm Networks and Metaswitch capabilities into their Azure Stack Edge. And they're going to be selling that through their ecosystem directly to enterprise customers. Now, telcos have a play in that if they happen to have a portion of the value-added services or if they're reselling that solution. But if you look at the value proposition and where the value capture is shifting in the private network space specifically, we see that shifting to other players. And then the next question is, why is Dish losing prepaid customers? Considering its current customer base is low income with prepaid, what do you see as the major target customer segments for 5G postpaid when it launches?
I think with Dish, they do have the competitive price points, but there's other, there's a lot of low-cost options in the market as well with Cricket. They're very competitive with pricing. The same thing with Metro by T-Mobile. I think the unlimited data they're offering, I think that's a big contributor to it. So their price points are very high with unlimited data. So at Verizon, 90% of the new ads were unlimited data. I think it's pretty similar across the industry. So they're targeting price-sensitive customers, but at the same time, their unlimited data plans, their price points are very high. So there's likely a lot of these customers are going over to a Cricket or T-Mobile. Metro by T-Mobile is the new name they have now. They're moving into those offerings. The same thing with cable and MVNOs. Their pricing is very competitive too. They have very competitive by the gig pricing. That's actually, on par with what Boost Mobile is doing with their tiered data plans.
Yeah, so I want to just add a little bit to what Steve is talking about. So Dish is starting off in a challenged position, right? So they acquired a struggling business from Sprint, and they're trying to deploy a new architecture network that, quite frankly, nobody's really done it before. Rakuten may be the most closest reference to what Dish is trying to do, and specifically building a network from the ground up in the public cloud using Open Virtual RAN. Hasn't really been done before, at scale at least. and there is a lot of challenges and uncertainties associated with this. So when you look at their future and the challenges that they inherited, they're going to have to stick with being the price leader. And I think that that's baked into their new architecture assumptions, where the new architecture is able to operate a network at a much lower cost than what the traditional network architecture is. And, you know, we've seen numbers out in the market, 30% less, 50% less, total cost of ownership to operate a traditional architecture, a greenfield new architecture versus a traditional architecture. And DISH is going to exploit that opportunity to extend more aggressive pricing on prepaid as well as postpaid. We're expecting they're going to have to do that to take share from a Verizon, an AT&T, or a T-Mobile even. When you think about the entrenched how entrenched the big three are and how hard it's going to be to get people to churn over to DISH, they're going to have a really compelling value proposition. And a key aspect of that value prop is going to have to be a price leadership role. So those are some of the things that we're thinking for DISH in their future. I do think long-term that they will be able to get this network stood up, and I do think they'll be able to take some market share. But it's not going to be easy, and I wouldn't underestimate people's comfort level with the existing carriers and maybe their willingness to stick with those carriers and not churn out to a DISH. The value prop would have to be incredibly attractive to make the move and do the shift. The other thing to keep in mind with DISH is, as Steve was talking about before, the Sling TV overlay. If they could bake some kind of a video distribution aspect to their value proposition, that might be some card they could play to entice subs to churn over to their network. But that remains to be seen. Okay, and then there's another question here on slide 12. You cited cable MVNOs are improving, but they're significantly behind. Do you believe they'll be more significant going forward? And is there a lot of untapped upside? So these companies are growing at a strong double-digit rate, but it's off a very small base. Their growth prospects are good going forward, but Steve, if you can go back to the market share slide. If you look at the relative market share, these guys are a rounding error still if you combine the three of them. So if you add up those three numbers, you're looking at less than 2% of the U.S. wireless market is the cable MVNOs. I mean, in the best case scenario, they might be able to more than double that market share. That's not really a huge disruptive threat in the context of the totality of the U.S. market. So let's say hypothetically 2 to 3 years from now, they more than double the market share from, say, 2% now to 5% by the end of 2023. It's still relatively small. So they're more of an annoyance to the big three than a huge threat to the big three. The telco that is the one to watch is really T-Mobile. Because if you look at the spectrum position that they have, the clear time to market advantage with mid-band, the spectrum depth that they have, and the aggressive move into fixed wireless access, they are a disruptive behemoth that can really shake up the status quo in the market. So if you're looking at the full landscape of the U.S. market, the company to watch is still T-Mobile. The cable MVNOs, I would think about them as noise and kind of at the periphery, but they are not, by no means, going to be at the same disruptive level that T-Mobile is going to be in this space.
Yeah, if you look at their overall strategy, like Comcast, Charter, Altice USA, the overall strategy is to preserve their broadband base. Is how they're targeting at having that value proposition, adding the having that value proposition of tying the wireless services together with the broadband packages, the residential broadband packages. That's the overall value proposition. They're using it as a churn reduction tool. I think it's going to be very vital for them over the next several years, as with Verizon and T-Mobile expanding their 5G fixed wireless services. It's going to be a very strong churn reduction tool for them. So it's going to be, they're not going to grow into very profitable businesses in themselves, the cable MVNO businesses. But in the big picture, things is going to help to preserve, the profitability of the consolidated business by helping to reduce churn from the larger broadband base.
Great. So looks like that was all the questions. So thanks very much for joining today. Hope you found this information insightful, and hope everybody has a great day. Take care.